We are talking today about private lending. So private lending, that is a topic that a lot of people, I know when I first heard it, it kind of went over my head. I was a little bit lost. I didn't quite understand it, but it's actually a lot simpler, a lot easier than you might think. And it's a strategy that investors and lenders are really putting to good use now in our market, in our environment that we're in right now, in particular, because of it's difficult as investors to get mortgages. So why go to the banks if we can get it from a private lender? And so we might start thinking, though, how is that going to work numbers wise? Is it possible to make money numbers wise when we're taking money from a private lender and we're paying a higher interest rate? Do the numbers still work? We're going to go through two examples tonight, guys, to show you exactly how the numbers work for both the lender and for the borrower, and how both of them in these examples made money. And you're going to see it's actually fairly straightforward, and it's actually a lot simpler than going to your typical bank to get a mortgage, especially if you're doing a quicker flip or you're wanting to do rentals right away, that sort of thing. Number one, what is private lending? Number two, why should we be learning about it? Number three, how do the numbers work? Number four, how do we find these lenders that we can borrow money from? And number five, I asked some of our Ignited members that are using private lending right now, what are some of their top tips that they would like to share? And so we got some really good tips for you when it comes to finding money, what to do, how to set ourselves up, all of that kind of stuff. So some really good tips. Let's look at some numbers. I'm going to share my screen and we're going to go through two examples. And a couple of things I wanted to mention before I share this is, number one, these are examples that happened within the last 3 to 6 months. Okay. These aren't examples of 5 years, 10 years, 20 years ago. These are deals that were purchased. Money was made here within the last 6 months. Second thing I wanted to say is they were in hot markets. In fact, both of these examples that we're going to share today, one was in New Brunswick and one was in Ontario, in Ottawa, in the Ottawa area. So if you're wondering, well, can this be done in my market? The answer is absolutely. It can be done in really any market across the country. But I wanted to put those words in there because, you know, a lot of us, when we start hearing these kind of things, we think, well, okay, fine, it'll work there, but not here. But this is a strategy that you can use no matter where you are in the country. What is private lending? Let's simplify it, guys. It's not that complicated. All of us are familiar with, if we need a loan or a mortgage, we go to the bank. That bank can be Bank of Montreal, CIBC, Toronto Dominion. It can be any of those banks, the big ones that we know. It can be some of the smaller ones in our local provinces or cities. But it can also be the bank of mom and dad. It can be the bank of my aunt, your favorite aunt or your favorite uncle. It can be the bank of another investor. So when we're talking about private lending, it essentially means that you are either the lender, you're lending some of your own money, that's either cash, or that might be some of your RRSPs, or you're borrowing money from somebody that wants to lend you some cash or some RSPs and make an interest rate. It's as simple as that. So private lending is just, what that means is you're just going to somebody privately versus going to a big bank. Maybe in some cases, you still might go through a mortgage broker to access those private funds, but you're accessing it from somebody smaller in most cases, okay? So that's what we're talking about. That's what private lending is. If I need a loan to do a renovation on my property, I can go and ask another investor that I know and say, hey, I'll give you 10%. I only need it for 3 months. If I go to the bank, are they going to set up a whole loan process and a mortgage and a line of credit, and I only need it for 3 months? They don't want to do that, right? So it's a lot easier in a lot of cases just to go to a private lender, say, hey, I need some money for 3 months. I'm going to pay you X amount of dollars, and everybody's happy. So that's what private lending is, and that's what we're talking about today. Why is it important to learn about it? Second question. It's important to learn about it because, and really interesting, the results of this poll, that a lot of us have some money that we want to lend out and make a decent interest rate on. So think about it. If I just leave my money in the bank and I get 0.012% on it over a year, Or I might invest, we went through these examples a couple of months ago. Maybe I'm going to invest in mutual funds and get 5% on average per year, or maybe stocks and get 8 to 10% on average per year. If I can invest into real estate, my RRSPs or my cash, and I can get 9, 10, 12%, and I can be in and out, or sometimes long-term, whatever I'm looking for, I can set the parameters instead of having somebody else set them for me. That is very, very advantageous as a lender to make that kind of an interest rate. As a borrower, it's way easier to qualify for. You're just convincing a lender versus convincing and going through the whole application process at your typical mortgage company. So why do we want to learn about it? It's a great strategy whether we are a lender or a borrower. So how do the numbers work? How do the numbers work on these deals? We're going to go through 2 examples and we're going to get to that right now. So let me share my screen with you, and we're going to look at deal number 1. Now, this is a deal that came from one of our Ignited members, Liana Nisanova. And so she did this deal just recently, and I hope it's clear on the screen. We tried to put it in an infographic here so it's nice and clear and easy to understand. So we're going to clarify here. We have an investor. So in this case, that's Liana, our Ignited member. We have a lender, which is a private lender of hers that she has a relationship with. She wanted to buy a $500,000 house. She put down, her and her partner put down the $100K initial investment, and her lender gave her a first mortgage up to 80% loan to value, which was $400,000. And she made the agreement for 9% interest. If you're as an investor and you're thinking, well, how can I afford to pay 9% interest? A couple things to remember here. Number one, that interest that you're going to pay is based on an annual interest rate. Okay, so we're going to get to the numbers on that in a second. But number two, for lenders, when they hear 9% interest or 10% interest or whatever it might be that we're offering, that looks attractive to a lot of people. So Liana here offered her lender 9% interest on the $400,000. She had $100,000 to put in. They bought this house. She bought this house for $500,000. Now, this happened to be in the Ottawa area. And what's really cool about this is that Liana is really good. Her and her partner are really good at finding deals. They ended up finding this deal that they figure all we need to do. Now, do you notice this box here? It doesn't say renos. They didn't do any renovations. What did they do? They cleaned it. They staged it. They took pictures of it. And guess what happened? This is a deal that for $500,000, all she needed to do was clean it, stage it, take really good pictures, and bang, look at the results. Follow this down. 5 days later, an offer was received. 30 days later, this property was sold for $600,000. This is really, really exciting, isn't it? How did they get a $100,000 bump in value? 1, a good cleaning. 2, good staging. And 3, good pictures. So there's a real key that all of you can take from this, is that sometimes you don't need to do a major renovation. You don't need to be knocking down walls. You don't need to be gutting a property. Sometimes all it needs is a little lipstick and rouge, we call it. Sometimes it just needs a little cleaning and staging, and you can change the look of a property dramatically. Okay. So in this case, they made $100,000. Now here's the key. And this was the deal that that Liana made with her lender in this case, was that it was a 9% over a year, but anytime after the first 3 months worth of interest, she could just pay it off. Okay. She doesn't have to keep that loan for the entire year. She doesn't pay 9% of $400,000 is $36,000 of interest. She doesn't have to pay $36,000 of interest. Why? Because this deal was closed 1 month after they bought it. It was sold to somebody else. That's the beauty of private lending. Okay, you can move this money nice and quick. But the deal that she made with the lender was she would pay a minimum of 3 months interest. Even though this house closed in 1 month, 1 month later, you see the profits here. And in fact, this number here where it says after 3 months, this profit was actually after 30 days, after 1 month. But 3 months of interest was paid to this lender. So let's work that out. How do we get $9,000 off of 9% interest on 400,000. So again, what we do to make this calculation understandable, 9% of 400,000 is 36,000. 36,000 divided by 12 months in a year is $3,000 a month. That's the interest that Liana would have to pay to the lender. And her deal was she had to pay a minimum of 3 months interest. In this case, that was $9,000. 3 months at $3,000, $9,000. So in 1 month, this lender on his $400,000 made $9,000. Not bad for writing a check and getting a check written back to you, right? And now that $409,000 is available again. And that's what a lot of lenders will do. When a good deal is done the first time, they will continue to lend with that particular investor. Now, how did this work out for Liana in this case? Remember, she put $100,000 in. They made $100,000 of profit. They had to pay out the private lender. They had to pay out the realtor, the lawyer. They had some acquisition costs, all of that sort of thing. Her and her partner walked away on this deal with a profit of $40,000. What did they do for that $40,000? They found a great deal. They cleaned it. They staged it. They took great pictures. They had their realtor sell it. Bang. $40,000 in 1 month was the profit that they made together. Pretty good deal. Pretty good deal overall for the lender. Pretty good deal for the investor. Who wouldn't want to be the lender in this case, right? You know, and here's the key, guys, is that because Liana does an awesome job like this, that lender will lend again. That money is recyclable. So now she can find another deal and use someone else's money to make money. That's how this works. I just want you guys to be clear on how this works because it's a great strategy for both lenders and for borrowers. So we're going to look at example number 2. And first off, congrats, Liana, on an awesome deal. Thank you for sharing those numbers with us. Okay, example number 2. Let me pull that up here for you guys. And this one has it's a little bit different, but you're going to see the same type of idea here, guys. So in example number 2, we have, again, our investor. This was Colin and Nicole. And we have our lender. This was a house out in the Moncton area, Moncton, New Brunswick. And you see the price is a little different. We're down at $230,000. And there was a reno involved. So do you notice the numbers here? First of all, I want to show you something here. The investor, Colin and Nicole, do you notice how much money they have into this investment? Zero. Well, think about that. If you're going to the bank, are they going to fund you 100%? In most cases, no. We have to put, if we're buying a personal residence, we can put as little as 5% down, but we have to put them a minimum of 20% down, generally speaking, as investors. In this case, if you're not dealing with the bank, if you're dealing with a private lender, they set the rules, not the banks. Okay. So in this case, they actually put 0 down, but you notice that the lender gave them $267,750. And Colin and Nicole, they decided that they would pay 10% interest on that money. So do you notice that there's a discrepancy here between the price and what they got from the lender? They bought the house for $230,000, but then there was a renovation involved. And so the lender also funded the renovation in this case. The lender also funded the closing costs in this case. So with the renovation of $30,000, the closing costs, or I think the renovation was $33,000 and the closing cost was $47,50. All the money they needed to do this deal was covered by the private lender, and they were paying him or her 10% interest. So the reno was done. They staged it. They took pictures. They sold it. The actual selling price, what they were planning to sell it for, was $315,000. They actually sold it for $325,000. But let's just do the numbers based on $315,000. On $315,000 here, $267,750 at 10% interest. After 3 months, the interest, okay, down here, the interest is $66,9375. And you notice something a little different with this one. It wasn't just an interest rate that Colin and Nicole paid them, but also a $2,000 lending fee. And that is something that is fairly common when it comes to private lending as well, is that sometimes there's lender's fees. that are involved as well on top of the interest rate. So they were willing in this case to pay a $2,000 lending fee and $6,693 or $6,700 in interest. So in a 3-month period, and that's how long it took in this particular instance, in a 3-month period, there was a profit for the lender of roughly $9,000. And remember, in this case, the lender's only lending out $267,000. In our last case, the lender was lending out $400,000. Okay, but this lender had to wait 3 months for his money, whereas in the previous case, he only waited 1 month. So you see the differences. The interest rate can change, the fees can change, the time period can change when it comes to private lending. They're all different based on the project, and that's the beauty of it, is you can tailor it to be what you want it to be. So how did they do? How did Colin and Nicole do in this case? Well, they sold it for $315,000. Or they actually sold it for $325,000. I found out a few minutes ago. So they did better than this. But minus their closing costs, their profit was roughly $22,000. So they had to pay their private lender off. They had to pay their closing costs off, and they made a profit in 3 months in this particular instance of almost $23,000. So is this something that they could do with a regular bank? Yes, but much more difficult. And in this particular instance, the bank, they wouldn't have had the time to get a regular mortgage. There's so many different factors that come into play where private lending just makes it so much simpler and so much easier. So a great win for both Colin and Nicole, a great win for the lender in this case. It's a great win for everybody in this particular case. So there's some numbers, guys, on how private lending works for both the investor and how it works for the lender. Private lending is a great way to acquire property as a borrower and great returns as a lender, win-win. And that's really the beauty of it, guys. And that's what we're trying to show here, is that this is a win-win for both scenarios, for both sides of the equation. We talked about what is private lending. We talked about why it's important for us as both lenders and borrowers to use this as a strategy. We found out how the numbers work. We looked through 2 examples. We saw how the investor made money. We also saw how the lender made their money. Sometimes there's fees involved. Sometimes the interest rate can change. And in fact, there was a good point that I think it was Colin that brought out, or no, it was Leanna. I can't remember. One of these 2 wizards when it comes to private lending said it depends on the loan to value. So for example, if it's 100% loan to value, they're going to pay a higher interest rate. If it's a lower, like the example of Leanna's of 80% loan to value, the interest rate's going to be lower. There's less risk for that particular investor. And so depending on the loan to value, depending on the amount of money, depending on whether you're the sole investor in this particular deal, or maybe there's multiple investors putting money in. If the investment is $267,000, maybe there's 3 investors at roughly $90,000 each. So it depends on how the structure is set up. So if you are looking to be a lender and you have funds that you want to put to good use, let other investors use so that they can make you a profit and they can make a profit as well. By all means, this is the place to connect, guys. That's what this group here, Fearless Real Estate Investors, is all about. Connect with one another. If you're a borrower, say, I'm looking for something. I got a great deal here. Here's the opportunity I have for you guys as lenders. And if you're a lender, say, hey guys, I'm looking for an opportunity. Get those conversations started, guys, because that's really where all of this awesome stuff begins. Now, top tips. I told you we get some top tips from our Ignited members. So I'm going to share some with you, and I want your feedback on these tips. When it comes to private lending, I want to know what your thoughts are on these tips as we go through them, okay? So here we go. I'm going to read some tips that Colin and Nicole, again, our Ignited members, that shared this awesome deal with us. I asked them, what are the top things that somebody should look for when it comes to doing private lending? So number 1, what Colin and Nicole said is understand the processes of the trust company you are using. call them yourself, walk through the forms, the workflows, and keep open communication through the process. So their first tip was understand the process of the trust company. Now, why is a trust company involved? That's if you're using RRSP funds or you're using some sort of registered funds, then those funds would need to be registered in a trust company. And then you borrow it from that trust company. Okay, so understand that process. Get to know the workflows, because when somebody wants to lend their RSPs and you say, oh, you have to do step 1, 2, 3, you don't want it to be confusing for them, especially if they've never done this before. You want to make it simple for them. Okay, so that was rule number 1, or lesson tip number 1 that Colin and Nicole wanted to share. Number 2, have a team on the ground who has the experience and track record to help ensure the project is successful. Extremely important. And we talk about this all the time, guys, is having relationships around you, having a good relationship with a realtor. In both of these cases, a realtor was needed in order to resell that property. And in some cases, a realtor is needed to find the property in the first place. A real estate lawyer is needed, an inspector, a good contractor that's going to give you accurate quotes if you're doing a renovation. These are the numbers you need to know ahead of time. Okay, so having that team around you is really important. So awesome. Point number 2, Colin and Nicole. Point number 3, take the time to really know your investors. Maintain communication. And here's an interesting point. Don't be afraid to share bad news when something goes wrong. I love that point. Don't be afraid to share bad news when something goes wrong. Sometimes renovations go over budget. Sometimes something is discovered that you weren't planning on. Sometimes there's bad news. Don't be afraid to share that. Keep that line of communication open throughout the whole process between you, if you have partners, and your investors or your lenders in the particular deal. So 3 really good points that Colin's bringing out here. Take the time to know your investors, maintain good communication. He also said maintain good communication with the trust companies if you are using registered funds, and have a great team on the ground. And that's really, really important points that Colin shared with us. Yeah, Joanna, exactly. Transparency and honesty is essential to build a relationship based on trust with your partners and investors. It's absolutely essential. In fact, our investors, sometimes we shared bad news with them. You know, we've owned properties for over 15, 16 years with some of our joint venture partners. And there's been years where it went down in value. Do you think I like sharing that spreadsheet when I'm showing them that their property just went down in value over the last year? Absolutely not. But am I being realistic if I don't? No, you have to share the bad news along with the good news. And when you do that, you gain that trust. And when you gain that trust, people will invest more with you. That's just the way that it works. Now, we have some more good points. Let me find them here. Liana has some top tips she wanted to share with us as well. Tip number 1, she says, we make money on the buy. We purchase this property, so this is the example we talked about, for $100K below market price. Remember, they made $100,000 by just cleaning it, staging it. This was in the Ottawa area, by the way. But here's the key. You might say, well, why would a seller do that? The market is crazy there. The seller needed to have it sold in 2 weeks. For him, term and quick closing was more important than price. He was extremely thankful to us, and he needed proceeds from the sale to close on his new house. So think about that, guys. Is that sometimes we can make money on the price if we better the terms for a seller. It's another good point. Really good tip that Leanne is bringing out here. In some cases, people need out really fast for one reason or another. They don't want to lose that new dream house maybe that they were buying. So in order to not lose that, they need to close on this one ASAP. They don't have time to throw it on the market. Leanna swoops in, gives them the closing they need. They're happy. They move on. It's a win-win for everybody. So making money on the purchase, that's point number 1 from Leanna. If you're looking to do this type of thing and you are paying a higher interest rate, making money on the purchase really, really helps. Number 2, having funds in place. Always look for lenders' funds. So point number 2, having funds in place. So do we go out there and put offers on properties and we don't have the funds to close on them? I've heard that a lot of people do that. and wish and pray that they can find somebody in the meantime to fund it. And then they're in a real rush and they're putting a rush on everybody. Not my suggestion. Let's sit back. Let's get the lenders in place first. Let's make have those conversations, build those relationships with potential private lenders who will be there if and when we find a great deal, and bang, we are able to close on it. So an interesting point here that Liana made is having funds in place. Always look for lenders and funds. So at every given point, guys, it's important for us to always be dropping those seeds into the garden, because not every seed is going to be sprouting. And some seeds take months to sprout. Some seeds might sprout right away. We talk about this a lot in our boot camp and the importance of dropping lots of seeds. So we're always looking for funds. We're always looking for lenders. And if we're always doing that, then when we need it, when we need to close on something really quick, somebody is going to be there to close on it with us. Create relationships with potential lenders so they like and trust you and will lend to you on short notice. Notice even without an appraisal report, as in some cases, we simply don't have the time to get it. So the more we get to know our lenders, the more we trust our lenders, the more they trust us. Sometimes maybe even an appraisal, we don't have time to get it. I know that Tiff and I, on several occasions with our JV partners, same thing. We made a phone call, money was in the bank next day. And that's the trust that you can gain with your JV partners, with your private lenders, so that you have the funds available to close on these deals when you find a good deal. Point number 3, knowing what you're doing. And that one seems pretty obvious, doesn't it? Know your numbers, make sure they work. Know what needs to be done to get what you want to sell it for. Take a calculated risk. The absolute worst case scenario should be breaking even, not losing money. So we need to know our numbers. It's as simple as that. And that's something that Colin touched on as well, is having a good team around us. So having those contractors to come in and give us quotes if we're not a contractor ourselves, know our numbers ahead of time. So we talked about what is private lending. Very simple, getting funds from somebody privately. Why do we need to learn about it? Extremely helpful, whether you're a lender or a borrower, great way to make money. How do the numbers work? We looked through 2 examples. The profits were 20-some thousand and 40-some thousand dollars for our investors, and lots of money, $9,000 in both cases in 1 month and 3 months for the lenders. Works out great for both scenarios. Okay, guys, that's it for our Tactical Tuesday today. I hope you learned a little bit about private lending. I hope it clarified some as to how it works and why it's so important for every one of us to be involved in it one way or the other, because it's a great strategy that we can use as investors right now.